On the CNBC Newsline is James Chakmak, who's got a neutral rating on Twitter at Maness Cresty Hart. He made a call back in July that Disney and Microsoft are the most realistic takeout candidates for Twitter. James, great to have you with us.
Thank you.
So it seems more clear now, given what's gone on with the NFL and their week-on-week increase in terms of streams, that this could be it. Are you getting any word that this is more likely to happen?
We're not getting any more word, but what we can say is that Disney needs to find a way to operate in a post-cord-cutting world, right? Because they're investing in the video streaming tech. Now they need to reach an audience. And what you're seeing is an increasingly incestuous relationship between Twitter and Disney. As you know, Twitter's moving more to sports. They're already working with and partnering with the video streaming tech company that Disney partnered with, and Dorsey is on Disney's board. So we've always said that media companies don't really make sense because Twitter has to remain agnostic. But Disney is the one that I do think could potentially pull it off.
Does a Disney plus Twitter, does that equal a bigger competitor for somebody like a Facebook?
Yeah, potentially, because what you're trying to do is win mind share in the eyes of advertisers and users. Because when you think about the $600 billion ad market, 40% of that is still locked into television. So any way you can capture minutes watched, whether it be streaming sports, which is Disney's forte, that is potential share gains versus Facebook and Google. So definitely, I do think that if they can have a distribution platform for content, not only for their own but also third-party content through partnerships that Twitter is already forging, you can make that argument certainly.
How advantageous is it for Twitter that Dorsey is on the Disney board? And obviously there's a precedent there because Steve Jobs was on the Disney board when Disney bought Pixar.
Look, I just think it makes the case that much more compelling. When these companies work together, Bob Iger, comes to the Twitter offices. This is it's a close working relationship between the two companies. And that's why we made the case back in July. We actually didn't see it as those actually happening. We've been saying that the likelihood of a takeout is probably not that high, but at the same time, with the value of the pullback in the stock that we've seen, buyers do come to the table.
Last quick question, James. If there is a deal, whoever the takeout, the buyer is a premium already in Twitter? Is it a 21% premium, 22% premium, and that's that? I think so. You're seeing some of these numbers out there, 30 billion. I don't understand how you get there. You can be as creative as you want with the numbers, but at the end of the day, they only have 140 million or so daily active users. That number's not growing. Revenue growing in the single digits now. It's hard to make a case for above where we are right now.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the eye right here to watch the latest from CNBC. Thanks for watching.